Hey everyone, welcome back to another market closing live stream. In the next bit here, Cathie Wood will be on CNBC, so we will be, of course, covering that. It'll be interesting to see what her thoughts are, not only on the employment report that came out this morning, which we've, of course, already covered, but on some of the weakness we've just seen over the last couple months. Fund flows out of ARK. I mean, some really intense things going on over the last 2.5 months here. And it's really just been anti-ARK, unfortunately. You know, she's been buying Coinbase since IPO day. It's been there's been a lot of rough waters for ARK Invest and really the higher valuation textile companies. Roku obviously killing it today, so I wouldn't be shocked to hear a little bit of an update on Roku from Cathie. We'll see. Maybe we'll get some commentary on Tesla and so on. But yeah, let's take we'll start a little bit earlier today while we wait for that to happen. We'll start with what's going on in the market a little bit. We'll see what we've got here and see if there are any opportunities. There've been lots of opportunities here lately. Let's take a peek in. All right, folks. So what we got here? We got cannabis running the show today. You got OGI, Tilray up 15%. Roku's up 11.8, not as high as we were earlier in the day, a little off those highs, but still very, very good move here. Peloton back to higher levels. I'm sorry, not Peloton. This is Nikola here, a little bit higher as well. Nikola up 11.5%. Oh, there you go. 11.5% here. We've got NGA ran up to 20%. We saw this in this morning's live stream. Did not think it was sustainable. And, without a doubt here, it looks like we have fallen back under the VWAP. We are, we're still up 10%. So don't get me wrong, still up 10%, but definitely off those highs that we had this morning here. We have Doge at 63 cents, actually moving up about another 4 to 5 percentage points since the morning AM stream. Obviously, the next 24 hours are going to be a big, big, big deal for Doge. We're going to see if we can break through 69. I really think the next resistance point is going to be at $1. So if we can break through 69 and pay it, like stay through 69, that would be the dollars there. Then we've got, let's see here. Gosh, I have to say, I feel like I've been live streaming all day. I went from literally, geez, it has been live streaming all day. We did numbers, unemployment. That was at 5:30 in the morning. Then we did the market open. Then I did the private live stream. Then we did Ben Mala. And now we're going to see Cathie and the close. It's been a lot. It's been a long day of streaming. So we might actually end the market close a little bit early today. It depends when Cathie speaks, so we'll see what happens. But let's see if they give us a time frame for when Cathie speaks, and then we're going to keep going here and listen to the sticks here. We're looking to
close its offices for good and have no headquarters. And our own Husan reporting that fintech company Green Dot will leave its headquarters in California as it embraces a permanent work-from-home model. Dom Chu taking now a deeper dive into return to work. Dom?
Yeah, we're going to pull back off return to work here. Let's keep looking at the sticks for a little bit here. So Redfin's at 8%. Wayfair back up nicely over 6.7. This morning, we were finishing some analysis on just the relative pricing power that you have at Wayfair, Enphase, Etsy, and some of our other favorites. I mean, we had a bunch on here, whether it was Tesla, Neo, Amazon, Google, Apple, and we're really looking for what's value right now, and we're finding some really neat opportunities with how these prices have come down. So if you're a course member, make sure you check out the live stream from this morning. I think some very good conclusions on the sheets we've been working on. But I highly encourage looking for opportunities in this kind of market, even though we've had a positive move here today. It's been pretty red. Hold on a sec. What is this? Exiting San Francisco. Coinbase exiting San Francisco.
You go downtown, things seem pretty much normal. The Village and Soho and so forth. But Midtown is very, very different because you just don't see the level of office worker traffic in Midtown, do you, Melissa?
It's a ghost town these days. It sure is, Tyler.
All right, folks. Thanks for watching Power Lunch for a Friday. Dom, great to see you. Happy Mother's Day, Melissa.
Thank you. Closing bell starts right now.
Right now.
Hear it.
Thank
So we're looking for when Cathie's going to come on. Let's hear it.
you. Closing bell. I'm Sarah Eisen along with Wilfred Frost. Wall Street digesting a jobs shocker today. Non-farm payrolls missing estimates by the largest margin in decades. But that isn't stopping the rally. The Dow and the S&P 500 both hitting record highs in the session. So are the Dow transports. Let's look at what's driving the action. It's all about the jobs report. Coming in, 266,000 for April, well below estimates of a gain of 1 million jobs. March was revised lower as well. The unemployment rate actually rose to 6.1%. Tech stocks are seeing a big rebound after a wild week. The Nasdaq climbing 0.9%, led by outsized gains for names like Roku, Nikola, Zillow, and Match. And the energy sector in the lead again today to cap off a very strong week. Now up more than 8% since Monday's open. 59 minutes left to go in the trading week, going for 5 days in a row of gains for the Dow, Wilfred.
Coming up in just a few minutes, a big exclusive interview with ARK Invest CEO Cathie Wood. After stellar returns in 2020, her flagship innovation ETF is down 11% on the year and 30% from its peak. She'll join us to discuss her latest trades and the volatility in tech, in fact, down 9.5% just this week. And later, Transportation Secretary Pete Buttigieg joins us to talk about the Biden administration's...
I like how he says in a few minutes, Cathie will be talking. Watch, it ends up being like 30. We'll see. Hey, maybe she'll actually be here in a few minutes. We'll see. I will keep an eye on it. So let's finish up with the sticks here. Let's make sure we get through the sticks just to see how things are going into Friday here. And of course, I'll keep an eye on CNBC for the moment we see Cathie pop up. In the meantime, we have volatility's down. Let's go to all stocks. There we go. We've got Big Digital down 9.15. Honest Co. down on what is today? It's second or third day. Today's its third day of trading. Trading lower than IPO. We've got lots of stocks kind of moving below IPO lately. The last couple months been a little tough. Beyond Meat falling into the close here. Well, actually, sorry, hold on, wrong sticks. No, there we go. It certainly has fallen throughout the day, but maybe trying to actually rally into the close. We'll see what happens. Getting some green candles, but those could have been pushed by a little bit of volume here, and that volume's already receding. So keep an eye on that. You got Palantir. Palantir up 1.87%. I'm sorry, down 1.87%. We are under $20 per share on Palantir. Property Solutions is down 2.47. Carvana down 4.99. Shift Technologies, the used car sector, just getting smacked here. Makes you wonder if there just aren't enough folks for or not enough used cars, and so transactions may be going down, even though price per vehicle may be going up. Voyager Digital pretty much flat. GM pretty flat. JP Morgan went flat after being down 2.5% this morning when we had the jobs number. Jobs number really sending a signal that higher inflation may not be coming as fast as we expect, which means rates may not be going up as fast as we expect, which generally means banks have less profit. So that's sort of the topsy-turviness of the market right now. If you haven't yet, I highly encourage, if you haven't yet, go to Twitter and at least follow me on there. There's some of you who are making a Twitter just to follow me on there. But I have... I like to generally post things finance related. Sometimes you are going to get a little bit of politics on there, but I did post some thoughts on crypto this morning and what happened, but also some thoughts on the big miss on employment. And if you want to get these pretty fast, you don't have time for a video or something like that, this is a great place to do it. So at Real Meat Kevin on Twitter is a good option for you to follow as well. Okay, so let's keep going with the sticks here. Again, waiting for Cathie to show up. We've got on CNBC, we've got Pinterest up about a quarter. GameStop's up about 0.5%. GameStop's sitting around 161. It's kind of been sitting here for a while. Quite a while, actually. Been sitting in this range, somewhat range bound. Not a surprise after the momentum we have seen. Although it is a surprise that it didn't range bound that long at 40. You know, it sat at 40 for a couple weeks and then took off. We've got, what else do we have here? Apple up slightly. It's at 130. Apple, we're basically just doing nothing over the last while. I mean, how long has it been? How long have we been at 130 for Apple? Let's give it a zoom out over here. I feel like at least 4 or 5 months, if not even into September, after the split. Let's see here, because our split was like August 27th or something like that for Apple. That was the big rally, right? Yeah, look at this. There you go. August, right there. August, you hit a high of, what'd you hit over here? You hit a high of 137. Folks, Apple has literally done nothing over this period since the stock split. Amazon's been very much in the same place, trading really, really sideways. You know, Enphase just got wrecked here recently, but Enphase is one that this to me is just a wonderful buying opportunity on Enphase. Arcimoto is another one that has really seen a rally sort of evaporate on it, unfortunately. And it's a company that I imagine could really benefit from a higher stock price, maybe creating some funding and get that manufacturing really moving faster. Yeah, Tesla up 1.2% here. Chipotle's just been killing it all pandemic, but also not a lot of movement. We've been at 1,300 for how long have we been at 1,300? Let's zoom back here a little bit. Okay. No, I mean, we've really only hit, what, 1300s here, December, 1400. Okay, so kind of flat since January, flattish here. AMD's kind of been range bound as well. Look at that. I mean, you really see here since August, AMD has done nothing. You know, it's just literally been a sideways trade. You've had a lot of this. And that's created a lot of frustrations in the market because you really have had a lot of just flat in some of the stocks that really took off initially. What's really been kicking butt has been recovery since November. You know, recovery since November has just been, I mean, there was your inflection point. Call it the election, call it timing, call it COVID going out. I don't know what it is, but recovery's just been the place to be. It makes you wonder soon, you know, you're going to get to these levels of topping out and potentially seeing a rotation back to some of those oversold attacks. We'll see. Time will tell. Maybe Cathie will touch on that today. You've got Coinbase right here, basically straight down since IPO, although we do have a green day today, up 2% here. Invitae up a couple percent. Yelp at 39. Here's one that also blew up since the election. It's been a little rough, but very, very well. We've got Ethereum at 35, at 31 right now. Lemonade still sitting under 80. Bitcoin at about 58,000. Etsy's up 4%. AMC's up 4%. Really struggling though to stay above the or it's not even there right now. Really struggling to try to get over 10% or 10%, $10. Doge is starting to run a little bit. Take a look at this. We're at 11.48% on Doge. This is a sudden run. So I'm choking on this. Oh, that's pretty bad. Anyway, yeah, Doge really running here. It was down like 58 cents this morning. Oh boy. Hold on.
Issue. Also,
Help
the
me.
issue of health concerns that are out there. Plus, you know, we can tell a couple stories here, Sarah. We can tell a story of, yes, unemployment benefits are keeping people on the
there. CNBC covered for me for a second. Still waiting for Cathie, of course. Yeah, I ran out of coffee. I have water. I got a sip left of old Topo Chico, but see, Topo Chico doesn't get old. Okay, just kidding. That's pretty flat. Anyway, usually the next day it's still pretty good. That one's probably 2 days. Anyway, all right. So what do we got here? Federal Reserve just tweeted. Oh, what do we got here? Let's go look at Twitter. Federal Reserve. What you all got? Consumer credit is up 5.1%. Revolving credit up 2.4%. Non-revolving credit up 5.9%. March consumer credit up 7.4%. So debt, in other words, right? Generally, that's what we're referring to with credit here. This is not credit available generally. Consumer credit increased at 5.1% during the first quarter. Yeah, okay. Let's see here. So in terms of credit, yeah, these are loans. These are just loans. So this is, we want to look at the last column here, March. We have seen, we don't have the card data yet. Okay, so we got NAs here. Consumer credit outstanding. Yeah, consumer credit outstanding. This is debt outstanding. Not seasonally adjusted. Got a bump. We're at kind of, okay, this is Q1 broadly. Not as high as Q4, though. Not as high as that holiday spending. So even though consumer credit is up, I don't know. It almost feels like a little baity here because, yeah, sure, consumer credit might be up, but I don't know. Let's see here. Major holders, depository and finance, credit unions. Okay, that doesn't matter so much. I don't know. Type of credit would be more interesting to me. Consumer outstanding credit. Here we go. I don't know. Revolving. Okay, these are just percentage changes on an annual rate. Boring. Okay. This might take a little bit more time to digest. Anyway, let's jump on over to CNBC for a moment. Any moment now, we'll have Cathie on. And then we'll keep an eye on the sticks as well.
For Black and Latino workers are still higher. That gap between themselves and also the national average is wider than normal. Also, a lot of people who are low-skilled workers or have less than a college education, many of those workers still have very elevated unemployment measures. When we look at employment to population ratios,
we talked a lot about employment this morning.
Up 31. Nice move.
Okay, did not do that. There we go.
The Fed is not at the point. Well, it's not seeing data at the point.
That's what we want. A commercial? It's not what we want.
My first investment, traveling the world for about 5.
I always got to go to commercials. All right, fine then. Let's get the terminal up. Let's see what's going on with the rates. Let's get Bloomberg live up. We'll see what's going on. We will obviously pay attention to CNBC to make sure we do not miss a second of Cathie on, which she, well, we'll see. We'll see. I tend to say soon. They said a few minutes, okay? Let's see if we get an update.
Developments around the coronavirus and what it all means for the American recovery and the reopening. And later, a can't-miss exclusive interview with ARK's Cathie Wood.
Later.
As her flagship fund sits around 30% below its recent highs. Having a good day today, but overall, it's been a rough streak. You're watching Closing Bell on CNBC. The Dow is up 219 points.
Does anybody know what time? Whatever. That's what it is. All right. Let's see here. Let's go ahead and pull up the 10-year. Let's see what we got on rates. They obviously plummeted this morning, which was great for especially the tech stocks. But some of that has been given up, and it's almost kind of like rates sort of went back. It's always like 45 into the. I know, yeah. This is why they say in a few minutes. It's like, it's like clickbait with them. It's like, stop. It's so annoying. Come on, CNBC. Give us some real numbers here. Yeah, I mean, we're pretty much back to where we were. Look at this. 1.571. What is this? Super Jeff Vid, did you find that time? That'd be great. Or are you guessing? I don't know. But anyway, 1.571 over here on the 10-year. We'll see how this continues to behave. Obviously, the downward trajectory is a good thing. We do not want to see an acceleration in the 10 too dramatically. We don't want to see an acceleration in any of the rates too dramatically. We have Honest actually kind of looks like it might be slipping into the close here even further. Yeah, a little bit of slippage here into the close. Beyond Meat, 7.3. We got Mind Medicine, 5.4 to the downside. Palantir, 1.9 to the downside. Matterport, not sure why Matterport be pushing to the downside here. We've got, you've got Matterport down at 1147. It's a phenomenal company too, so it creates more of a buying opportunity. But generally, we're finding SPACs are just getting wrecked. Okay, what else? Wells Fargo down a little bit. Makes sense. So we've got some of the banks down. AT&T back down, or back to about 32.19. It's actually impressive. It's been sitting at 32. I mean, that's the stock that's been at $30 literally for a year. It's crazy. So, all right, what else do we got? We got Tootsie Roll. I don't know why Tootsie Roll's on this list, honestly. It's kind of funny, though. Lots of flat here in the middle zone. Gainers, though. OGI and Tilray, really quick kicking butt today. And that Doge is trying to push back to 69. We'll see if it gets to 69. That's where it did cap off the last time. So let's see here. What else? Zom's up 6.7. We got some momentum in Zom usually, as well as Sundial. Both of them below their initial average here in the day. Luminar moving. Here's the LiDAR plays. They were so hot for a period of time. We've kind of seen the LiDAR plays fall a little bit out of favor over time here. But let's give it a zoom out here. It is up 6% today. But yeah, definitely seen them fall out of favor. let's go tune into maybe some top news here. Let's see what we got on the top side. Let's see here. Top. And let's see what the top news is. All right. Whenever it actually comes up. Top. All right. It's very slow today. It's all right. Here we go. Top news. What do we got? Jobs report. Latest sign of pain. Pain. That's a word we're too familiar with in this space. Swamp traders. Vaccine stocks take a wild ride. Consumer borrowing rose more than forecast. Yeah, last thing I think we need is more borrowing. Elon Musk on SNL spurs Dogecoin party plans. Yeah. Gates divorce Royals philanthropy world. Puts Buffett in hot seat. All right. Let's listen in over here for a moment. Let's listen to what Mr. Scott Gottlieb has to say.
The country, we are still seeing a rise in cases. Oregon, Colorado still has a lot of cases, but pretty much the infection levels are coming down all around the country. Prevalence is declining. Vaccinations are continuing to increase. And I think as we get into the summer, we're going to see this really start to collapse. I think by June, things are going to feel pretty normal. I mean, in many parts of the country, they feel pretty normal right now.
So the next step is kids. And obviously your company that you're on the board of, Pfizer, is trying to get emergency authorization for younger kids to get the vaccine. A new Kaiser Family Foundation survey found that less than a third of parents of children under the age of 18 would get their kids vaccinated right away. How important is it for this recovery and this herd immunity we're trying to achieve to get the kids vaccinated?
Well, it matters, but the most important thing in terms of protecting children is getting the adults vaccinated. What we saw in the data out of Israel is as you got higher vaccination levels among the adults and the virus started to dissipate in the adult population, it also started to dissipate in children as well. Prevalence declined very sharply in kids. I think if Pfizer does get the authorization for 12 to 15, I think you'll pick up probably about 5 million kids. There's 17 million kids in this country aged 12 to 15. I think maybe as we head into school, we'll pick up another 5 million. We were never going to pick up the full 17 million, but I think parents will vaccinate kids. I think that there'll be some parents that do it initially. I think there'll be others that do it as we head into the school year. So we'll get a lot of the kids vaccinated.
Dr. Gottlieb, where do you stand on the debate around whether or not it's right to waive patent protection for some of these vaccines?
We're going to pull off the patent protection talk. Let's go ahead and jump for a moment. Let's see what we got over on Fox.
Two people were texting each other and some sort of suspense or drama unfolds through the course of this text conversation. But over time, as we saw more engagement and we saw people spending more time reading our stories, the stories started to get longer. We started to do stories where people were meeting in real life and it wasn't really just text anymore. And then we started to invest in these stories and we created audio stories.
This has been boring today. Let's get Cathie. Okay, do some real talk here, and hopefully they don't burn her like they did last time on CNBC. They put her on Shepard Smith, and it was like 40 seconds. No, okay, she got like 3 minutes. It's like 3 minutes. It's not a long time, you know. 3 minutes is too short. It's a ripoff. Well, it's gotta be longer. Anyway, all right. So everything's on commercial. Fine. Hop on over to the sticks then. The sticks it is. I know, right? They're the ones who said in just a few minutes. I know. In just a few minutes. Yeah, a few minutes is like 30 or 40. They've done this before, though. It's funny. All right. So what else do we have here? Let's find out. Righty then. Let's say Mind Medicine. Mind Medicine is on the trend to potentially go back under, what is this? Under $3 again. Invite a biochemist like me. I sent you an email. Did you? Oh, I'd love to hear that. You want to talk future schools and biochem? I'd be down to talk about that. Make sure if you have a connection to somebody who wants to be interviewed, make sure you send it to staff@meetkevin.com. Staff@meetkevin.com. Biochem. Is it Linda? Is it Linda? Are you Linda? All right, anyway. So where were we? All right. Yeah, the cars are going down. I wonder what kind of news we have on Carvana here. Let's see what we got. Used car prices set another record. Blame the chip shortage. Yeah, hot used car market. It's weird to see that. Okay. All right. Thank you. I got you. It is shocking to see the used car space selling off a little bit, especially with just really everything kind of pointing in its direction. Maybe creates another buying opportunity, though. Although there have been no shortage of buying opportunities. That's for dang sure. No shortage. QuantumScape, what do we got here? Quantum, I'm going to look at this on a day scale. Yeah, QuantumScape's been another one that's been sort of rotating to the downside here. We've got, all right, how about this? Let's see. Doge is at 65 now. Doge is running. Oh, look at that. And Doge has really got the run right now. We do have a red candlestick forming at the moment. We'll see how this develops. I wonder if they'll ask Cathie about Doge. There you go. That'd be the question. All right. Somebody mentions the CCIV is running. Let's take a listen here. What do we got? CCIV, it's at 3.3. So, okay, yeah. That had a nice little volume peak there. Look at that volume peak all of a sudden on CCIV. Nice little push there. Lemonade, 3.63. Let's listen in for a moment here. It looks like, let's do this. Let's jump on over to actually a Jim tweet. And let's see what his 2 stocks are that Jim Cramer would buy after the jobs report. How about that? Let's give that a shot here. Let's see what his recommendations are. All right, here we go.
Jim, what are you watching in the markets? Because I know that you had Etsy and Papa John's on Mad Money last night, and they were 2 key interviews for you.
Yes, I mean, I'm looking at companies that are in the NASDAQ that have been relentlessly down because people feel that once the economy opens, they're not going to be used. And 2 of them, Etsy in particular, has just been hammered. And I thought Etsy made a very good case for itself. And I would buy the stock. I would buy the stock fairly aggressively. I think all the negatives are known. Papa John's I just like because it's by far, of all these restaurants that everybody seems to want, that's the one to buy. I think it's doing better than Domino's. So you've got 2 that I think are very easily bought here. And would make a lot of sense to buy, even in an environment where you think that unemployment is not as robust as it should be.
Nice shout out there for Etsy.
Jim, what are you watching in the markets? Because
let's see here.
She's looking for new opportunities. As we're to break, here's a check on bonds trading in quite a.
Nope, no Cathie yet. Yeah, I mean, seriously, I mean, the Etsy sell-off is a beautiful opportunity. I mean, it is it's a bargain where it is right now. So all right, let's see what else we got. We've got jumping on over to the 10. 10 is sitting at almost 1.58 now. So kind of back where the day started. No real depression on the yields there. Let's go back to CCIV bought commercial time during SNL during the Elon episode. Savage move by Lucid. I don't know. You know what that sounds like? It sounds expensive. I don't know about that. Better be good. So what else we have here? Beyond Meat, CBOE volatility's down, DraftKings down. DraftKings, I'm pretty sure got upgraded, but they have been going down as well. Let's look at DraftKings for a moment. DraftKings. Let's just look at a little bit of a pattern here. What do we got going on? Golly, yeah, DraftKings has just been straight down the last couple months here, 2.5 months. DraftKings was such a great momentum play there for quite a while. He's a real outperformer for a very long period of time. I mean, it's done exceptionally well. Here was our COVID crash. DraftKings had an initial rebound through June, flat. I mean, yeah, we're back at some lower prices here. I mean, it's certainly December, but potentially as low as October prices here. Yeah, they certainly had that opportunity there too. So DraftKings, another one that's kind of gotten beat up. Lots of beating up going on in the market. Really good, nice opportunity to hop back in. IPOE news came out, somebody says. Thank you for mentioning that. IPOE is, that's a nice little shoot up here on IPOE. Volume bars somewhat increasing. Let's just quickly grab IPOE news and see what we got while we wait for Cathie here. Let's see. IPOE. There we go. SoFi says SPAC merger effective with the S4 SPAC merger effective with the SEC. Okay, so just sort of reiterating that the merger is expected to happen. So on that news, we've got some more attention on IPOE. Which is good for me. I got an option on IPOE, and it's a shorter term option too. That's because I said it when I bought it. I'm speculating on this thing going right back over 20, and then I'm gonna dump it. So we'll see. We shall see as we wait for Cathie. All right, what's Bloomberg got for us? Does Bloomberg have anything? Let's go back to Bloomberg Live here.
What are you generally anticipating there?
You know, I think that that's a very tough question to answer because, you know, really what you're asking me to do is to predict the trajectory of the virus. I do think that people are ready to go back. So as soon as I think, you know, people feel it's safe to do so, restrictions are lifted, you're going to see a lot more people going to games. I've certainly been waiting. I definitely am looking forward to attending many games, hopefully in, you know, the later parts of this year. And I think that could have a very positive effect on us as well. The more people engage with sports, the better. Certainly people still watching them at home.
Or it's all already priced in.
Extent it doesn't matter, but I think, you know, the more engagement we see with sports, the better. And I think going to the game and feeling the atmosphere is an important part of that.
Breathe it in. I've been to some of those stadiums over in Boston. We're sure that you'll be there soon enough. Jason Robbins, DraftKings chairman, CEO, co-founder. Great to have some time with you. And a programming note, Bloomberg Technology speaks to the key policymakers, business leaders, and thinkers.
Boring. Where's the interview when you want the interview? Where is it? I just have no idea. It's just on standby. In the meantime, I guess we'll look at Doge. Doge, yeah. It's trying. We got some work to do. All right, let's listen to Sarah for a sec. Sarah, when's Cathie coming?
Exclusively, the ARK Invest CEO will be with us to talk about her fund's pullback and which stocks are on her radar to buy next. Near session highs here, 33 minutes left of trading.
Next? Good. Great. Finally. Ay. All right, what else we got? Nicola is a little bit of a red candlestick here into the close. We've got Redfin doing well into the close, although it's gotten destroyed lately here. Poshmark's also been on a downtrend day-wise, actually a substantial downtrend, finally showing a little bit of a green candlestick again here. Maybe beginning sort of a slower recovery. Quite frankly, I'd like a slower recovery, one that's going to be more sustained. That's going to give me more time to buy some of my favorite stocks at decent prices. You know, I think Etsy at 164. This is such a bargain, such a freaking bargain. I mean, you're paying like 23 times 2024 earnings. I mean, it's juicy, so juicy. Canoe's sitting at 770. Zillow's at 425. Arrival trying to sneak back to 20 here. 57.6 on Bitcoin. Lemonade sitting at 3. Lemonade under 80. This is where it belongs, honestly. Like for now, like while we can buy it, right? This is where we should be looking at buying. Is Lemonade under 80. You know, Motley Fool really pumped them up to like 180. That was, I thought that was a little extreme. I did sell some Lemonade at those higher levels around like 155, 160. Sold some options that were really nice. But yeah, good. This is the better buy territory. I like that. Coinbase sitting at 263. It's like a buffet. That's what it is. It's like a buffet. You walk in the buffet and it's just like, there's so much opportunity. And they keep bringing out more food. That's what's happening. It's at a good buffet where they just keep bringing out more and more food. And you kind of stuffed your face in February. You had some more in March. You had even more in April. And now it's kind of like, okay, we're full. You can stop. Like, we're ready for the check. Okay, we're ready for the market to go up again. Oh gosh, it's been entertaining. There hasn't been a shortage of entertainment, that's for sure. MP Materials did go up over 30 again for a moment. That nope, right back under 27. MP Materials has been one of those that's just I think it's somewhat struggling because of the EV play isn't there. You know, when EVs get expensive, when Tesla gets expensive, when NIO gets expensive, when Churchill gets expensive, that's when all of a sudden you have people like momentum on over into the sexy, potentially sexy EV-related stocks. That's when you get the quantum scapes. That's when you get the MP materials running. That's when you start seeing the dollars hallas in all the related industries. But EV's cheap right now, so why do you need EV-related when you could just have EV? I don't know. Are you going to get Cathie on now or what?
Innovation ETFs has skyrocketed over the recent couple of years, surging more than 400% since its inception in 2014.
Just get Cathie on.
Last year, as retail investors piled into the fund, up nearly 150%.
So what I'll do is we'll listen to Cathie, add some commentary, sum it up after with some opinion. It's going to be great. Let's hear it. Here we go.
Wood joins us now in an exclusive interview. Cathie, good afternoon. Thanks so much for joining us.
Happy to be here, Wilfred. Thank you.
Let's touch, if we may, on this sort of current pullback. Do you actually welcome that as a long-term buying opportunity for a lot of the stocks you love, or are you feeling the heat a little bit?
Oh, I love this setup. The last time I was on, I think I said that this rotation was good news because it meant the bull market was broadening out. It was strengthening. And the worst thing that could have happened to us is to have the market narrowly focus on just our ilk of stock, the innovation space. Instead, it has broadened out so that year to date, I think it's energy's up 40%, financials are up 27%. And from the peak, in mid-February, our strategies are down. The ones that have been hit the hardest, not all of them, are down 30 to 35%. I love that setup. From our point of view, 5-year time horizon, nothing has changed except the price, and therefore the return, which at the peak of the market and of our strategy in mid-February, we expected a compound annual rate of return of 15% on average per year from our strategies. Now that the prices are down,
25%.
That number is somewhere in the 25 to 30% range.
To 30, she raised it.
You may love the setup, Cathie, but it hasn't been great for your business. I mean, worst start to the month on record. You've seen outflows of $1 billion. How are you managing these declines? And there's speculation out there that if the outflows continue, it would be hard to meet redemptions.
Oh, Sarah?
No, well, first of all, I don't have to worry about redemptions. ETFs, the ETF ecosystem is a beautiful thing for portfolio managers. I highly recommend it. So what that means is when I am making decisions, they are investment decisions. I have nothing to do with the flows. The ETF ecosystem, the authorized participants, the market makers outside of ARC, although of course we're overseeing their actions, they are facilitating our flows, and they're doing it in many ways with algorithms and derivatives. I think the ecosystem has become quite profitable for them. So we have experienced no problem. If you look at our spreads, there's been hardly a disturbance in our spreads. As far as flows, actually, we've been very gratified. I think if you go month by month now, this is endpoint to endpoint, we have not seen a month of redemptions yet. I would be, I don't want to say never. I mean, of course, we're going to get redemptions. And in fact, in the ETF structure, when we get redemptions, because of the in-kind nature of redemptions, we are able to offer a much more tax-efficient strategy or portfolio in this wrapper than we ever could have in a mutual fund.
Cathie, I wanted to dive into a couple of some of the talking points people have put out in the last couple of months. And the first one is what you would say to those people that have criticized the way in which you've held your own ETFs within one of your other ETFs. Do you accept that in the least that's not an ideal?
The 3D print ETF is in the space ETF.
This is the 3D printing fund within the space ETF, ARKX.
Nailed it.
Because 3D printing is one of the killer apps, in fact, the killer app, is aerospace, including space. we felt it very important to have a good smattering of 3D printing. Now, 3D printing is a smaller cap space. And so we felt that because it was so important that we would put it in our fund. However, our clients are not being double charged. That comes out. We do not charge them double fee.
There you go.
Instead, they have a very well-diversified participation in 3D printing, which I think as more and more people understand how important it is going to be to aerospace, not just, rockets and satellites, but also airplanes, including the engines. I think they'll appreciate why we own 3D printing and wanted to own it in size.
Whether it's the 3D,
it doesn't look good
ETF within the Space Exploration and Innovation ETF, or a couple of the other holdings in that Space Exploration ETF, like Netflix, like Deere, should that ETF be called just the Innovation ETF? I mean, is the Space Exploration part of it at the front of its title, the lead part of its title, a little bit misleading?
What's balancing, bro?
No, not at all. In fact, what we believe, and comparing and contrasting to the other offerings out there, which have satellite radio, satellite TV, the old world, we believe the next frontier here, where there are real money-making opportunities, is not space tourism. It's going to be a very small market in the short term. It's two markets. Mobile connectivity are 3 billion people around the world who have no access to Netflix, broadband, and the internet.
Nice.
And the satellites that SpaceX and others are putting up there now are going to give those people an opportunity to become a part of the Netflix family. So we think Netflix is going to be a beneficiary. Deere is probably, because of its name and everybody knows it's tractors, they think it's old world, old DNA. They, for a more industrial company, they're one of the most progressive companies I've seen embracing technologies. Now, farming is going to become much more efficient. The productivity gains are going to be enormous as we start using drones to identify exactly how much fertilizer is needed, where. So I think that drones and some of the connectivity from a weather point of view, they've done for years. They bought a company from Monsanto to focus on the weather and how weather patterns would affect farmer productivity around the world. So I think autonomous farming is going to demand drones, satellite information, and so we think it's going to be a big play.
I guess the other factor I'd just throw in as well, that you remove limits on investing more than 30% of assets in a single firm and more than 20% of a single firm's shares, as well as some of those other factors that we mentioned. And I guess just bring it all together, the broad question I had is whether, because of your fantastic inflows, it's a great problem to have, whether you grew a bit too fast for your investment universe, for your ilk of stock, as I think you said earlier in the interview, and whether at any point over that period, the last 6 months or so, you did pause and consider thinking, maybe we should stop allowing more inflows and close the ETFs, close the funds, rather than launching more ETFs, raising limits, buying your own ETFs within your own ETFs, and whether that was a question you at least asked yourselves over this massive inflows.
Why is he doing that?
Well, it's not possible to close an ETF, unlike a mutual fund. So that's
it's not impossible, though. I mean, you can change the rules of the game somewhat.
I do not think it's possible. I think the regulators would have a big problem with that, the way they've set the structure up, especially because of the way ETF flows are handled. Really, that's not within one firm like ours. There's a whole ecosystem around us. We went from 10 billion to 80 billion in 10, 11 months. Right. That was pretty parabolic. And of course, we were very grateful for those flows, and we're still grateful for the flows we are getting. But that's parabolic. we are used to exponential growth. That's what we do. Our strategies, our innovation platforms, we believe are going to scale exponentially, and therefore our capacity should scale exponentially. 10 to 80 billion was a little faster than that, and so we've taken risk control measures so that we do not own too much of one stock. And you'll also see we've seen an explosion of IPOs around innovation, secondaries, SPACs are all about innovation. So we are getting more and more opportunities to scale with these newer companies participating in the innovation space.
Nice.
Cathie, I wanted to talk Tesla, one of your favorite stocks, because that's part of the performance issue. It's off 25% from the highs. And there's some real questions right now about the reliance on autopilot and whether that has led to some deaths. You have been super bullish on Tesla's autonomous future and the vision of robo-taxis. Isn't that problematic, given some of the concerns here around safety?
Nope.
Actually, I think we've gotten some very important information recently that Tesla is seeing its way through, so to speak, to autonomous. And that is, they've decided to take radar out of the ecosystem and just depend on vision, computer vision, CV, so 8 cameras. I think they're getting much closer. And, you know, as far as autonomous, when anyone talks about safety in an autonomous vehicle, they have to consider the alternative. The alternative is human-driven travel. Humans are responsible for 80% plus of all fatalities in automobiles. And so autonomous is going to really take that issue away from us. So we think that we're much closer than most do. We think we're probably not as close as Tesla thinks it is. But we do think within the next 2 years, we're going to see some really surprising breakthroughs from Tesla. We've been watching Waymo and Cruise Automation here, and we think they're probably struggling with how to scale that business. We think Tesla is going to go autonomous at scale or much more quickly than any of its competitors.
Wow.
And then there's the China issue. They seem to be really clashing with customers on social media, the public, and the government. What do you think is going on there, and how much of a risk factor is that for the stock and the business?
Well, we do think that that China wants its locals to win. We saw, I think just in this week, NIO, because of the battery swap system it has, no matter what it's pricing its cars at, it's going to get subsidies, whereas the Model Y will not get subsidies in China. So there is some favoritism for locals, but we found something out very interesting this week. If you look at the drop in share of Tesla's cars in the electric vehicle space in China, what you will also see is an increase in the number of exports to Europe. And in talking to the company, we found it curious. And it seems that the quality of cars being built in China, in that super modern factory, the quality is much higher than those being built in Fremont. And we know that the European customer used to beautiful German cars is very particular about quality and design. Yep. And we think Texas will be a step up as well. So Fremont's just a very old plant. So it was very interesting to learn that. And so I think that Tesla will manage the issue you've identified and that many are discussing by exporting to the rest of the world. And I think China's going to like that. China has not been a big exporter of autos to the developed world. This will be a feather in their cap.
Interesting theory. Cathie, We have a lot more to talk about with you, a lot more names to get to. So please stay with us if you would. We're going to take a quick commercial break here on Closing Bell. More with Cathie Wood and some of...
Good. Okay, they're going to keep talking to Cathie. This is great. Honestly, this has been wonderful so far. I mean, I'm just going to give a quick summary here, then we'll see how much of this we can hit during their commercial. But I love that she's talking about how this rotation is good. I mean, this is what we've been talking about day in, day out on this channel, is that, folks, stick with the high quality. Buy the high quality stuff. Short-term pain equals long-term exponential growth. That's what she's talking about. And she's even revised up her expectations. She used to say, oh, well, we think returns are now from, instead of being 15% a year over the next 5 years, we think we're going to be at 25% a year. She's revised that up. And now she's saying, well, we think now returns are going to be 25 to 30% per year after year after year for the next 5 years on the high quality companies they invest in. Those are companies like Peloton, Square, Roku, Tesla. Folks, these are the high quality companies that, yeah, they've sold off, but Cathie's doubling down on. She's playing a lot of defense here, but going with aggressive D, I would say, because CNBC's kind of, they're trying to attack her and do these like subtle slams on her, especially with, having an ETF within your own ETF. Cathie did very well to clarify we don't double charge our customers. We just think it's good to have 3 printers in with a space fund. Great clarification. CNBC still comes out and slams her. We got to get Cathie on the channel, okay? That's what we need, is Cathie on here. But anyway, we've got, we'll tweet her. That's what we'll do. At RealMeKevin. I'll send a tweet in a moment. But she mentions, look, there are so many tremendous opportunities that we're seeing because of these prices coming down, and defends why you want Netflix and John Deere, these very forward-thinking companies in the space fund ETF, because you're going to get so much more satellite connectivity that's going to help with not only Netflix access, but also drone access. Very interesting point of view, but you also get the balance with that. Of course, they've had parabolic growth over the last 10 to 11 months, growing the fund from 10 billion to 80 billion. We've seen the outflows been a little bit more severe. Anything under this line here, where my mouse here is, are outflows. And so, yeah, we've seen more outflows than we have at any point previously here. But that is because the market's been a little, poopy-doopy in certain sectors. I love her talk here on Tesla, that, look, Tesla's in for some big surprising innovations in the next couple months. And something that she really mentioned that really hit home for me, especially here in California, is that Chinese-made Teslas are actually higher quality. And she didn't say this part, but I know this part. The Teslas in China, they're higher margin. So you're getting a higher margin car, and what Cathie says, higher quality car made in China than you are in California's Fremont facility. That is a money play right there. That's big. Now we're going to hop back on over to CNBC here, but that was a really good statement there.
Are the classic stay-at-home plays, Teladoc, Zoom Video, Peloton, and investors have soured on them lately. Number one, because it seems like it would be as good as it gets during the pandemic, and a big pull forward in a lot of their revenue. And number two, you look at some of these earnings reactions, and you've seen some really sharp sell-offs and questions about whether they're overvalued. Why are you sticking with them?
Well, we legged into them as in this period. We had sold actually into the coronavirus because we saw these stocks soaring, and many of our others completely misunderstood. So we made some what turned out to be very good moves in terms of their relative appreciation one to the others. And we have been legging back into them in this period because they've been cut in half, most of them. So what you are saying about stay at home and the disaffection with them in the marketplace seems to be getting priced in. We think these are platform companies. They're for the new world that are harnessing data. And we're in a period now. Many people think we're going back to the old world. I don't think so. Better, cheaper, faster, more productive, more creative we're not going back to the old world. We really, even thinking about digital work. I know at our firm, we're debating exactly what our hybrid strategy is going to be and how it's going to work. But I think Zoom is going to become essential. It is part of the enterprise software stack in and technology stack, communications is the largest part of that stack. And we think that Zoom is going to take a bigger and bigger chunk of that stack. One of the things and from our own experience, we know, Zoom's at its best inter-company. Many people say, well, what about Teams, Microsoft? This is why Slack had to sell out to Salesforce. This is different. Microsoft cannot scale, we don't believe, the inter-company communications. They're very good at intra, and we use Microsoft in-house. But inter, we think that's going to be Zoom's market, and we do think it's going to take more and more of the traditional communication stack, PBXs, for example.
Yeah. What about Apple? Not a typical ARK stock, but you have owned it in a fund, and I've noticed that you've been selling it, and in fact have halved your position this week. Why?
Yes, what we do as a bull market extends, as it did last year, we usually put into the portfolio, since we cannot hold any cash, we put into the portfolio, I'll call them cash-like innovation stocks. So the FANGs certainly meet that criteria. They're acting like defensives. They truly are. On days when utilities and staples do well, very often communication services are doing well. So during a period of volatility like we've just seen, we will sell those stocks and move into either our more pure play or earlier stage innovation companies that are being hurt by the risk off.
Cathie, you grabbed some attention and news recently by buying into Twitter. Talk us quickly through the rationale, and I guess, are you buying more given that it's pulled back again of late, trading it down about $52?
Yes. So Nick Gruce is our analyst on Twitter, and he's been experimenting with Spaces, which is their version of Clubhouse. He loves it and thinks that could do very well. We also think that tipping, and this had been a rumor for a while, they announced it today, I believe, that tipping might become a bigger deal for Twitter than most people anticipate. Might be much more important to their monetization strategy. And as you know, we understand at ARK the power of Twitter. We are pushing our research out through Twitter. It is our most productive social network. It is helping our analysts engage with and become a part of the communities they are researching. There's nothing like Twitter to do that. And I think a lot more knowledge workers are going to be forced into, or lured into, onto the platform for that reason.
Cathie, away from your positions, I wanted to ask you about Bill Huang, who, as you know, has been in the news lately behind Archegos. And Bloomberg reported that he's a backer of yours. And I was just wondering what that meant and how well you know him and whether you've shared investment ideas with him.
I know Bill Huang. I met him actually through a church. We were both advisors to what was called the Financial Services Ministry, younger people going through the financial services industry, especially in New York City. Nice. So that was in 2013. And on our way back from that event, we were exchanging stock ideas back then, and I know he bought into one of the stocks in which we had a high degree of confidence, Netflix, and he hadn't been involved at all in U.S. stocks. He had mostly been involved in Asian stocks, so he was very interested, and we chatted a bit about media generally in the United States. So yes, he did provide the seed for our first 4 ETFs, and we were very grateful to him. It was at a time where market makers were sick of seeding new strategies because they'd be stranded with $2 million stuck in an ETF that doesn't go anywhere. So we needed to go out and find that seed. And Bill, hearing what I was saying about the company that I was going to start, and I did share that with everyone at that retreat, was very intrigued. And very intrigued with the stocks we were interested in. He was just beginning to learn about them. I have not spoken to him. I sent him a note after I heard about the unfortunate events that we've all witnessed, and I'm wishing him well. But he was there for us in the early days, and we're very grateful to him.
Do you know if he still had any capital in any of your ETFs in recent months? Obviously, there'll be a lot of banks chasing any remnants of capital that's left.
Yeah, to be honest, I have no idea. As you know, with ETFs, we don't know who our shareholders are. The idea at the time was to seed. I've never asked him if he kept the money in. If he wanted to volunteer, he might have, but no, we've never had that conversation.
Well, Cathie, thank you so much for this extended conversation. As always, it's a pleasure to catch up. Cathie Wood, thank you for joining us.
Thank you, Cathie.
Bye-bye.
That was really good. Okay, so I did a recap during the last commercial break on the first half of their discussion. So now I'm just going to do a brief recap here of the second half. Second half, a lot less to talk about in the second half. Talked about why Cathie is still investing in companies like Zoom. This is a big one. We've talked about on this channel many times before. It's a brilliant strategy, but Cathie Wood uses Apple as a cash park. We've talked about this, in fact, earlier in this particular video or this particular live stream. We've talked about how Apple has been trading sideways since like August. Since the stock split, the beginning of September. And this is something that really creates this opportunity where if you got a bunch of money in Apple, it can make sense to sell like an Apple or Amazon and move that money into something that has sold off like a Peloton or an Etsy or a Roku at lower prices before it just ran up. Or Twitter. Twitter's also been selling off, and she talked about how one of her analysts really likes Spaces. I'm sure there's more analysis that went into it, but really likes Twitter Spaces, and so they're buying Twitter. And Cathie talks about the introduction of the tip jar. Now, I would have really liked to have heard a little bit more about her thoughts or her thesis around the tip jar in Twitter, because Twitter does not take a cut of tips that will go to tweets on Twitter. So if you don't take a cut, how are you going to make money? I don't know. I don't figure that out yet. I mean, maybe more users, maybe more engagement, maybe more ads because of that. That's probably the answer. In fact, I would say with 90% confidence, that's what the answer is. But anyway, she thinks that anytime you get these sell-offs and people go risk off, time to sell and dump your Apple and Amazon and dump it into the ones that have sold off, which makes sense to me. This is actually one of the reasons I like putting money into index funds when the market's zooming, so that they're little piggy banks, I call them. I call them piggy banks. When the market crashes, you break the piggy bank, you sell the stuff that's kind of like your cash park, whether that's indices or, in her case, Apple, Amazon, and you park it into your higher, smaller conviction names. Now, what we got to do together, okay? We got to do this right before the closing bell. Please help me out. Go to @RealMeKevin on Twitter. We got 2 tweets here. I'm going to read the second one first. Cathie Wood would love to host you on YouTube. We love watching and supporting ARK Invest on YouTube. Go show your support. I even tagged Gerber Kawasaki here and Kevin O'Leary and suggested, hey, maybe we even do a group interview. That would be so cool. Think about it. Hey, Kevin O'Leary and Ross and Cathie all on one. That'd be sick. That'd be amazing. So retweet this. Make this happen. We gotta get ARK's attention. I did also tweet the comment about Teslas in China, China being higher quality. This honestly is something where if this ends up being true, why would anybody want to buy a Tesla manufactured at Fremont? California better help Tesla keep Tesla competitive at the California manufactured places. Otherwise, they're just all going to leave California, which is obviously the theme right now, is leaving California. Okay, we are 1 minute from the closing bell. 1 minute from the closing bell. Let's take a very brief look because, well, we don't have that much time. Take a brief look at the sticks here. We got Tilray up. We got the Ashford Hospitality up. Nikola's up 13%. Hilroy 14%. Dogecoin trying to run here, sitting around that 63 level right now. Endeavor up again, almost a full 10%, with NGA now LEV up almost a full 10 also at 9.89. We got Wayfair up 6.84. We got Etsy's up of almost a full 5% here. Let's look at Lemonade. Lemonade sitting at 79. Quickly, let's grab Piton. Piton is nowhere to Piton's pretty much flat, closing bell in 10 seconds. And we've got Tesla coming in at up 1.34% for Friday. Here's the closing bell.
Another positive week and a record close here for the Dow, up 240 points into the bell. A very strong week. That's 5 days in a row for the Dow. What's different today is that the Nasdaq joined the party. Technology bounced back in a big way. The Nasdaq closing up almost a full percentage point, and we are closing near the highs of the day, something we've seen in the last few sessions. Another bullish sign, especially as we go into the weekend. Tech joining the rally. The Russell also 2,000 of small caps, which had been lagging, up 1.3%. Wilfred.
Into the close, 10 of 11 sectors were higher, one just dipping in the red. Welcome to the closing bell, everyone. I'm Wilfred Frost, along with Sarah Eisen and Mike Santoli, CNBC senior markets commentator. As Sarah said, green across the screen for the three major averages, though just off the high for the Dow at 230 points higher. It was
all right, folks, as much as I love the suits, I have to wish you all a very happy weekend, because this weekend is the only weekend Meet Kevin is taking a vacation for the first time in over a freaking year. So I'm going to GTFO now, and I'll see you back on Monday. Bye. All right, folks, I appreciate y'all. Seriously, please retweet that Cathie Wood tweet on Twitter at RealMeetKevin. Follow me on Twitter. And folks, have a wonderful weekend.